A staggeringly weak jobs report driving stocks south across the board on Wall Street Friday. The S&P 500 now down more than 2%. Well, let's get some views on that report as well as implications for the stock market. We're joined by Gerry Frigon. He is Chief Investment Officer at Taylor Frigon Capital Management. He joins me now from his home in Paso Robles, California. Welcome, Gerry. Well,
Thanks, Fred.
companies cut 701,000 jobs last month. That was 7 times higher than what Wall Street had expected, and that really put an end to the 113th month streak of job gains. Why wasn't the sell? In fact, the stocks popped up at the open, but why isn't the selling more severe?
I don't think that anybody knew what to expect. I mean, that $100,000 consensus estimate, I think, was, purely a shot in the dark. Frankly, I don't think any of these kinds of astronomical numbers are going to be surprising, probably for the next few weeks, as the full brunt of this is fully digested. Look, the market sold off so hard, so fast over the course of the last few weeks. I think the market is right now just sort of in a no man's land. There's not liquidity of much at all in the market. I think that there's been such a significant amount of selling, and despite the rally last week, which probably the backing and filling that we're getting today is partly some folks that had traded that rally and are taking it off the table. So I think right now the market has sold off so hard. It's more in a kind of a wait and see. And so it should just be sloppy, I think, from here on out. And so numbers like this, I don't think anybody's going to be surprised at numbers that seem astronomical when you're hearing some of the dire predictions that are out there of, 30 some odd percent unemployment rates. That being the case, nothing is going to be surprising. And so I think the market has discounted sort of the worst.
And Gerry, you're also a portfolio manager. You manage a growth fund and you invest your own money in the same investments as you do with your clients. So, what kind of trades have you been making? Have you been tinkering with asset allocations? Have you been making any purchases?
We have been looking to buy things that maybe we had our eye on before, that we thought might be a little bit overvalued, but now obviously, are all on sale to the tune of 30 and 40% in some cases. But more than anything, and we kind of have a saying in our shop, be centered, be still. In times like this for us, because we are long-term investors, we make decisions not on trading basis, but on business basis. For us, we've been spending more of our time actually talking to our companies, just getting a sense of how they're handling this. And in the aggregate, we've actually been quite impressed. And it's sort of a sign, I think, of what you probably should expect from most companies that are well run, that they're going to handle this. They're going to take it in stride. We're certainly checking to see how companies are financed to make sure that they're okay. And in our case, fortunately, our companies are pretty well capitalized. So, for us, a little bit of buying.
And Gerry, what stocks or sectors are you snooping around right now that you're looking at that you think are that investors should look at too?
Yeah, from a space standpoint, from an industry standpoint, I think that any kind of software that's going towards efficiency in business, certainly collaboration. I mean, we've seen the performance of companies like Zoom. We don't own Zoom, and we won't likely be chasing that because that's held up so well with all the massive business that they're doing because
What
of
will
this.
you be
But
chasing?
there well, we're looking at we don't want to look at talk about the companies that we're looking at, but for example, companies that we own right now that we think will do well coming out of this are companies like Alteryx in the software space that help with, helping companies be more efficient about how they run their business. We're very heavily invested and focused on Israel, and one of our companies in Israel that is actually powering the Zoom and Microsoft, which we're talking over right now, is a company called AudioCodes, that we feel very strongly about, that they will benefit, and is not as well known as the Zooms of the world, but they help to power that in the VoIP world. So those are the kinds of companies that we're focused on right now that are already in our portfolio that we feel really good about and would certainly add to, as any dips happen. But those companies that are helping to make companies more efficient, be able to help companies save money from the standpoint of how they run their business, and that's going to largely, we think, take place in the software space. So that will be definitely an area of focus going forward.
Okay, thanks for some of those ideas, Gerry. Our thanks to Gerry Frigon of Taylor Frigon Capital Management, coming to us from Paso Robles, California. I'm Fred Katayama, and this is Reuters.